Something huge is happening in the American truck world, and no one saw it coming this fast. Ram, once a titan of full-size pickups known for power, luxury, and loyalty, has just dropped a bombshell that's sending shockwaves through the entire auto industry. Their prices are plummeting. Yes, brand new Ram 1500s, once selling well above MSRP just a couple of years ago, are now sitting on dealer lots with jaw-dropping discounts, cashback offers, and desperate dealer incentives that scream one thing: something is very, very wrong behind the scenes. What happened to Ram? Just a few years ago they were dominating headlines, winning awards, and fighting Ford and Chevy for the #1 spot in truck sales. But today, inventory is stacking up like never before. Some dealerships are reporting 3 to 6 months worth of Ram trucks just collecting dust. And the automaker is now slashing prices like never before, up to $10,000 off MSRP, plus 0% financing deals, loyalty bonuses, and even incentives for trading in your old truck regardless of condition. These aren't your typical end-of-year blowouts. This is panic pricing in real time. So what's fueling this sudden crash in value? It's not just the competition, although Ford and GM are certainly capitalizing. It's a perfect storm of factors. Inflation-weary buyers, skyrocketing interest rates, record-high monthly payments, and a shift toward electric and hybrid trucks that Ram is woefully behind on. While Ford pushes the F-150 Lightning and Chevy is rolling out the Silverado EV, Ram's promised REV electric truck is stuck in a PR loop, with delays, vague specs, and no real delivery timeline. Consumers aren't waiting, they're moving on, and that's not the only problem. Ram's parent company, Stellantis, is facing mounting pressure in the U.S. market. Between union clashes, changing regulations, and now Trump's potential tariff moves on Mexico, where many Ram trucks are built, there's a looming threat that could choke Ram's supply chain even further. Add in rising insurance costs, fuel prices, and a shrinking pool of qualified buyers, and it starts to look like the foundation Ram built its empire on is suddenly full of cracks. But here's where things really get interesting. Ram isn't just reacting to market forces. They're quietly changing their entire sales strategy, and it's starting to show. Reports are emerging that Stellantis is pressuring dealers to accept more inventory than they can sell, artificially inflating supply numbers to project strength while the retail demand simply isn't there. This kind of strategy worked when demand was red hot during the pandemic, but in today's cooled-off market, it's backfiring hard. Dealerships are now overloaded, parking lots overflowing with unsold trucks, and floor plan financing costs eating into profits, forcing them to slash prices just to survive. Meanwhile, used Ram truck values are also falling off a cliff. Just a year ago, a 2021 Ram 1500 with decent miles could fetch near-new pricing. Today, those same trucks are being wholesaled at auctions for thousands less, and dealers are panicking as trade-in values nosedive. That's not just bad news for resale, it's shaking consumer confidence. Why buy a new Ram if it's going to depreciate like a rock the moment you drive it off the lot? And then there's the looming question of reliability and brand trust. Ram's recent models have seen a spike in customer complaints, especially related to electronics, infotainment glitches, and drivetrain issues. As consumers grow more cautious with their spending, quality matters more than ever, and even longtime Ram loyalists are starting to question whether it's worth sticking around. Combine that with increasingly aggressive promotions from Toyota with the Tundra, and even Nissan trying to grab scraps with the Titan, and it becomes clear Ram is in a fight not just for dominance, but for relevance. But it doesn't stop there, because, behind the curtain, insiders suggest that Stellantis may be prepping for a major restructuring of its Ram lineup. Whispers from supplier channels and leaked internal documents hint at potential production slowdowns, or even temporary plant shutdowns if sales don't rebound by Q4. That could mean layoffs, delayed model refreshes, or even axing trims and configurations that aren't pulling their weight. It's a drastic shift from just 2 years ago, when Ram was pouring billions into flashy new interiors and pushing premium trims like the Limited and TRX as status symbols on wheels. And then there's the EV dilemma. Ram promised a game-changing electric truck, the Ram 1500 REV. But so far all we've seen is concept fluff and a bunch of marketing jargon. No confirmed EPA range. No real-world testing. No production date consumers can count on. Meanwhile, Ford is scaling production of the F-150 Lightning, and Tesla's Cybertruck, despite the controversy, is attracting global attention. Ram's silence is deafening. And buyers? They've noticed. The tech-forward crowd is shifting elsewhere, and Ram's traditional truck base is shrinking as affordability becomes the new king of the market. Now consider the wider economic pressure cooker. Interest rates are still painfully high, pushing monthly payments for even entry-level trucks to $800 or more. Insurance premiums have surged. Gas prices remain volatile. It's no longer just about brand loyalty. It's about survival math. And if Ram can't offer unbeatable value, why wouldn't a buyer jump to a more efficient hybrid, a deep discounted Ford, or even a mid-size alternative like the Tacoma or Colorado? Ram's once loyal customer base is now shopping with calculators, not just horsepower dreams. But here's where the narrative takes a sharp turn. Because Ram is not just losing market share, they're losing identity. For years, Ram positioned itself as the bold, rugged, luxury-meets-muscle alternative to the rest of the big three. They leaned into high-end interiors, smooth rides thanks to coil spring rear suspensions, and aggressive marketing that framed Ram owners as elite among truck drivers. But when prices drop this fast and inventory piles up this high, that premium image starts to crack under pressure. The public perception shifts from best-in-class to clearance aisle. And that's a branding nightmare that money can't fix overnight. And don't forget, this isn't just about trucks anymore. It's about the survival of a core, American brand. With Stellantis's global portfolio filled with brands like Peugeot, Citroën, and Fiat, many are wondering if Ram's U.S. legacy is still a priority. Some experts believe that Stellantis is using Ram and other American brands as cash cows, milking them for as long as possible, while slowly diverting resources to their more profitable European and global EV operations. If true, that would explain the delay in innovation, the sluggish EV rollouts, and even the lackluster marketing campaigns in recent months. What's even more telling? Dealer loyalty is quietly eroding. A growing number of Ram dealers are voicing frustration over Stellantis's lack of transparency, sudden pricing decisions, and unrealistic sales quotas. Some are even switching alliances, putting more focus on brands like Toyota or Ford just to stay afloat. That's not just a sales issue. It's a network fracture that could spell long-term consequences for Ram's position in the U.S. truck hierarchy. And with the 2025 model year fast approaching, and Ram's competitors gearing up with major redesigns, tech upgrades, and aggressive pricing, the clock is ticking. Ram needs a game-changing move, and fast. Because if they don't turn this around soon, they risk becoming the next cautionary tale in a rapidly evolving truck market. Consumers are no longer dazzled by chrome grills and leather-trimmed dashboards. They're asking tough questions about value, efficiency, durability, and future-proofing. And right now, Ram doesn't have convincing answers. The once unshakable momentum of the 1500 has slowed to a crawl, and the heavy-duty lineup isn't immune either. Fleet buyers are starting to diversify, and municipalities that once trusted Ram for utility fleets are now eyeing hybrids and EV alternatives from competitors that can offer lower total cost of ownership. Meanwhile, the used truck glut is growing by the week. Lease returns, trade-ins, and repossessed Rams are flooding auctions, driving resale values further into the dirt. For current Ram owners, that's a nightmare. Negative equity is becoming the norm, and many are trapped in upside-down loans. They can't escape. That's also discouraging new buyers, who fear they'll be next to take the hit. When confidence collapses like this, it's more than just a sales dip. It's a full-on market correction. But Ram's problems don't exist in a vacuum. This is all happening while the entire auto industry is facing its biggest transformation in decades. Electrification, autonomy, subscription models, direct-to-consumer sales. Every legacy automaker is being forced to evolve or risk extinction. Ram, however, seems to be hesitating at the edge, clinging to a formula that may have peaked back in 2021. If they can't pivot, innovate, and re-establish trust in a matter of months, not years, they might find themselves on the wrong side of history. And as whispers grow louder that Stellantis could prioritize Dodge or Jeep over Ram in future product investment, you have to ask, is this bombshell price drop the beginning of a bold turnaround strategy, or the first signs of a slow fade into irrelevance? Because one thing is clear,